Written TV coverage of the PCI Annual Meeting in Dallas is brought to you by AAIS. We're here at the 2016 PCI Annual Meeting in Dallas, where top U.S. insurance and reinsurance executives have assembled to discuss the state of today's property casualty insurance market and next year's reinsurance market. We spoke with AAIS President and CEO Ed Kelly about the biggest concerns of insurance executives here at the PCI meeting, emerging technologies and risks, and how advisory firms fit into new product and growth plans.
Yeah, I think insurance company executives, when I ask them what their biggest concern is, typically the answer is technology. But if you dig down a little bit and you ask them what the real issue about technology, it's not so much the cost, it's speed to market. Because when they're trying to respond to an emerging risk or an opportunity, they're looking for solutions that are going to get them there faster. And so we want to make sure we're not an impediment, but we want to be a partner in that regard. So how are underwriters responding to emerging risks from new technologies like drones? And on the one hand, what they must do is try to understand them if they're going to price them and underwrite them and perhaps exclude them, and we can be of assistance to them in that regard. And the other side is eventually they're going to deploy those technologies into their underwriting processes, and that's also an area that we've made some significant investments over the last few years, and being able to bring data, our own loss cost data, but also data from some of our technology partners that can assist those underwriters in taking advantage of those risks. The way government is impacting emerging risk, there's pluses and minuses, but one thing it seems to do is we've seen recently, it can slow down the ability to underwrite risk. What we saw with drones, we had to await the FAA regulations to come out to make it legal to use drones commercially. So from that side, it slowed us down. From the other side is we had a lot of members who were very anxious for us to address an issue. But fortunately, once the FAA addressed it, we were able to move forward with that. So I think typically what we find with regulations, the challenge for us and for our members is it can impede speed to market. I think in terms of how insurance companies can better leverage advisory organizations for growth is we're able to deliver an entire solution. Obviously the forms and the loss costs, but everything around product delivery, which is really critical when you're looking at emerging opportunities and risks. We do that through both our technology partners and the technology solutions that are required to effectively not only implement a new program, but also enhance and maintain programs going forward. In terms of where we're going in the future, AAIS has been enjoying some very good growth over the last 4 years. We've been growing at double digit. And we think those opportunities are only going to accelerate with the demands of the market and our membership. And that growth is coming, organic growth from our members who are not only seeing their own premium growth, but they're affiliating with us for some of our new programs, like the auto program or homeowners by peril, or some of our new solutions, like for COP and Inland Marine, the underwriting platform. But also we're experiencing growth from new members. And with the types of tools that we're able to deliver to them, we're seeing them growing faster than they have in the past because they can implement the programs faster. So the future for AAIS looks hopefully similar or even better than the last few years.
For more of our coverage of the 2016 Annual Meeting, visit the Written TV On Demand Library.